All right, got my weekly quick value posts. We're going to try a video walkthrough of this post for this week. So I'm at the vdl.substack.com website, and here is this week's post, quick market stats, some random charts that I found interesting over the last week, and then a quick synopsis of a stock that I took a look at. This week was Global Payments, ticker is GPN, payment processing company, technically a merchant acquirer. So FIS, FISV, those are big names in that space. And the first thing that drew me to this stock was the 5-year chart. This business is, or the stock price is flat over a 5-year period. I really like these setups a lot more than a falling knife situation where you've got something down big over a 1, 3, or 5-year period, but really being flat and having underperformed the market for that long of a time. I don't remember where it had been studied. Can't remember if it was Dave Dremen or someone who talked about these multi-year underperformers, not necessarily a falling knife, but a multi-year underperformer being interesting setup where there's an expectations reset, the bar is lowered, so to speak, from the investment community. So I thought that was interesting as a starting point. Then I covered what they do. I'll be honest, this is an industry that is pretty confusing. There's a lot of different players within the payment processing ecosystem. Customers can't necessarily interact directly with Visa and MasterCard, and so they go through these merchant processing companies that work with your bank to help capture these credit card payments, and they collect fees for doing so. Credit card use has been expanding, so obviously this has been a growth industry for quite some time. Okay, so as a starting point, when someone suggested I look at this stock, I originally didn't think much of it. I've kind of written this industry off as always being expensive, and that has historically been the case. These have been 20 to 25 times earnings businesses with big EBITDA multiples. So I was surprised when I plugged this in and saw that both GPN and FIS are trading at 10 times earnings. Fiserv's not far behind. FleetCor is another player, and then so is PayPal. There's a whole bunch of other people in the space, but these are some of the big names. So these multiples have gotten low. They've definitely compressed. Ticker is one of the tools that I like to use, and you can pull up just about any time frame. 5-year GPN's average multiple was 16 times, almost 16 times EBITDA, and the last was 9.6. Same for the 10-year stretch, 3-year stretch. So just recent phenomenon that multiples have compressed, and you can pull that in for just about any competitor as well, and you'll see the same thing. And to be clear, I have not dug into the industry enough to know what's causing that. So, I plan to do another stretch of quick value posts on some of these other competitors to try and understand, what is it really that's causing that drop? Is it just macro and consumer? There'll be a spending slowdown. Is there more competition, right? I mean, we've got Stripe, Square, all these other places that have popped up that can do the merchant processing. So there's got to be a couple of factors that are playing into that, because this is a market premium type business that's now trading at almost half of a market multiple. So okay, growth. This has been a growth business. They've done a lot of acquisitions. There's a big merger with TSYS in 2019, and then they just did another slurry of deals here in 2021. But over the next couple of years, analyst estimates are projecting growth. I don't know how reliable 2025 and 2026 numbers are in this ticker service, but this is mid-single digit revenue growth and mid-teens EPS growth for the next couple of years. This is a business trading at 10 times earnings, which is usually pretty rare to find. So, I find that pretty interesting. And the balance sheet's not bad. from a cash flow standpoint, cash flow and capital allocation, this is been a very cash generative business. Obviously, cash has grown quite a bit through acquisition, through mergers, yada yada. But they generate good cash, and that's consistent with other players in the space. They spent most of that on doing deals, and less so on dividends and repurchases and other things. And those are more recently starting to become a bigger factor in capital allocation. So 2021 looked like an interesting year. I'm going to pull this up in my table here. I like this format a little better. So 2021, this is an interesting year where, yes, they generated good cash. Here's CapEx. They spent $1.8 billion on acquisitions, and this looks like, call it $2.3 billion in free cash. But then they took on this big slug of debt to do a big accelerated share repurchase at much higher prices than today's stock price. So, that looks like it might have been an ill-timed bet. Then again, so far in 2022, they've been buying back a lot more stock as well. So, it's interesting seeing what's going on in this business and how they're using cash and really changing their capital allocation priorities. I just want to pull up the latest 10Q and go to the cash flow statement. I'd like to turn off the text. So, here's the 9 months of September 30th, 2022. So still good cash generation. Obviously, it's down quite a bit from last year. CapEx is up quite a bit from last year. They haven't really done the M&A so far in 2022, although they've announced another deal. And then, here's your repurchases of common stock right here. Another $2 billion on top of what they did last year. So very, very heavy on share repurchases. And we can see here, this is the big TSYS merger. It was a stock deal. They issued a lot of stock. Share count's down about 10% from that, and about 5% so far this year. So it looks like they're really starting to make some headway in bringing that share count down. And then the last thing, in doing this quick value review, I just look at the 10K, look at the latest earnings release, and whatever the latest investor presentation I can find. There was a big analyst day, investor day that they held in September of 2021 that had some good charts on it. And I found this one to be interesting, similar to a chart I've seen from Fiserv, FISV, where they talked about the total reinvestment capacity. So at today's price, GPN is about a $28 billion market cap. And from this chart, they're talking about $28 billion in capacity to spend from 2021 to 2025. So now, 7 quarters of that have already been spent. And they have done a lot of buybacks and used debt and everything. So, this number is going to be a bit lower if you're talking 2022 to 2025. But still, you're talking about a big portion of the current market cap getting deployed over the next couple of years. So, if they can use that money in a smart way, that could create a significant opportunity. So I don't know where the industry is headed. I don't know the prospects of this business well enough to say that it's a great bet at today's price. But, I find that fascinating from a cash generative business that is going to deploy their entire market cap in cash over the next couple of years. So that is GPN. Last chart to look at here. I thought this was a fascinating one. Here you've got the last 5 years of performance for this industry, and many of these are dogs. Fiserv maybe being an exception with positive return over a 5-year stretch. But both GPN and FIS are down over 5 years. And if I were to throw in the S&P 500, so they're all underperformers over a 5-year period compared to the S&P 500. So, it's interesting where you've got this group that was handily outperforming for many, many years. And then midway through 2021, that entirely reverses course and massively underperforms. So there's something going on in this industry that may be worth digging into to see if there's some potential value at play.